success in radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome. You're listening to the Financial Survival Network. This is Kerry Lutz, and stock market crazy. Gold takes a hit as well as silver. Where's it all heading? Well, who better to talk to than David Gurwitz of Charles Nenner Research. David, welcome back.
Hey, Kerry, always a pleasure to be on your show. And to all the listeners, we appreciate it. And I'll say it at the beginning, I'll say it in the middle, I'll say it at the end. Remember when we were in school, you'd say what you're going to say it, and then say afterwards what you said. So I'm going to say, please, when you listen, go to our site, charlesnenner.com, write in and say you heard me on Kerry's show, and you get a free month of our research, because it's really better than me talking about it, because then you get an idea ongoingly how we cover the stocks, bonds, commodities, and currencies that I'm going to try and talk about in the next 20 minutes or so. I think you'll do better off watching us than just 20 minutes of listening to me. That's my advice.
But in the meantime, pretty much gold's behaving as you said, and the one that I always keep an eye on, natural gas, exactly the way you said it was going to unfold,
right,
is the way it's unfolding, right?
Yeah, so let's talk about each. Gold, obviously, has had 3 bounces, we've called, and it is bottoming, whatever that means to the world. It's the meaning we wrote on, we said a while ago it's going to start bottoming in the third quarter, which it has, and yet we also said there's still another cycle low in a couple of weeks. But long-term, people who are in should feel good that it's going to go back up. That's what we see after 3 years ago, seeing the top around 1900. But still, it's another cycle low in a couple of weeks, so it's not really time to buy yet on gold and silver, although we do see the beginning of the up move. That's why a close above 13.13, we want to be long.
And that is a crucial number, David?
Yeah, I see. It's funny. Our numbers are pretty crucial. We don't just use cycles, which I've explained, but I'll do it again for the listeners. Cycles, from the Greek word circle, is a series of top-to-tops in any data series. And that's kind of how Charles got into the business 30 years ago, by discovering patterns in things. And he's a natural genius at pattern recognition, among other things. And he spent 15 years at Goldman Sachs doing this, so it's really worthwhile for people to watch. But basically, cycles only give you direction. They don't give you level. So it doesn't help if you want to time it vis-a-vis, cycles give you timing and direction, but they don't give you level. We also have a level algorithm that Charles came up with, kind of based on rocket science, very complicated. And that is very often more accurate and a better advisor to us than the cycles. We try and combine them, obviously. So now we're saying cycle lows in a couple of weeks. However, we're human. We're not always perfect. So if the level goes above 13.13, our system says be long, even with a cycle low in a few weeks, because that level might overpower the cycle low that's coming.
Hey, just a little bit of an aside, but we've been talking now since 2012, and another one where you were spot on is Apple. It's at new highs again. You called the cycle low a year and a half ago, and it split 7 for 1, and it's now over its prior high, which was around 708, if memory serves me correct. And looks like it's going higher.
We think long-term it's definitely higher. So people want to hold a long-term. It's good, even though right now it may take a little bit of a hit and be sideways for a while, which I'll talk about in later on in the second segment. But again, Apple, when we called the top, we didn't know anything why. We don't know why anything happens. We just see the past patterns repeating, and that's our thinking why we should go into something or not, because we believe go to the major tops or bottoms, you have less mental aggravation while you live through this. Because as we say, it's hard enough to make money if you're trading and you're right, because it's so aggravating. Think of how you feel when you're wrong, as all the people who have been in gold and silver for 3 years are really not happy. Even though we begged them to go out, after 10 years of run-up of each, was very hard to go out. And I understand that. but I also understand the mental grief of being in losing positions. So our attitude is trade less and, feel cash is not a bad thing to be in unless you have a 90% most likely trade. And that's what we try and do with all the different categories in stocks, bonds, commodities, and currencies. We talked about nat gas, which I've told on the show briefly that when it was $6 after it had been 12 several years ago, we just started covering it then. We really were not always covering nat gas. Again, what do we know about nat gas? This was before fracking, before anything. At 6, everyone thought it was going back to 12. And Charles said, hey, I hate to say it, it's going to $1.70. This year, a few years out. This is like 3-4 years ago. And it wound up going there. And as a result, banks made loans at high rates to nat gas producers and then had to get the loans called in like a mortgage underwater. And that led to more selling. And the newspapers called it bank force selling reduces nat gas prices. And we said, no, cycles down, stuff had to happen that would reinforce it. That kind of is how we see things. Cycles determine what's going to happen. We don't know what it's going to be. And then the thing comes up and you look back and go, oh yeah, that's what caused it. It was cycles.
Uh-huh.
So we think nat gas is going back to $2 again in a year.
$2 again. Wow. There's going to be a lot of unhappy producers out there, aren't there?
Yeah, for a while, but then it's going to go back up again. Like we think crude long-term is way up, which is 6 years ago when crude was lower. Remember, we called it at 147 and went down to the high 40s. And when crude 6 years ago was low, everyone was concerned there wasn't enough economic activity. Higher crude prices would mean greater demand. They wanted higher crude prices. Now high crude prices need one thing, it's war.
Uh-huh.
It's also called war cycles, like you and I were talking about before we started on the show. So cycles, if you go back over your life, 5 years, 10 years, 20, you were a different person at different times, and you are the cumulative effect of everything that happened in the past. Same thing with where we are today with all the different categories. Today, crude is crude, but we believe it's determined by the past patterns. That's why it's so crazy. Everyone thinks, how come it's going down? How come it dropped $3 yesterday with all the war talk? Because what happens today is not going to create the action. It's the past pattern and reaction to the past that humans seem to repeat. And that's why crude, which we've called, I'm looking at yesterday's update, even when mentioning crude, it canceled the seg signal above 95, but it has to hold above 94. But cycles are bottoming in a few weeks. With all the war and all the fighting going on, crude still was forced down. I mean, today it bounced, but, I wouldn't be long crude yet, but towards the end of the year and into next year, it looks crude and crude stocks look like that'll be a very good area to be in.
Yeah. So it's all about the war cycle, huh?
Well, war cycle comes into play being that 3 years ago, Charles said on Fox that war cycles are bottoming. Everybody listening should go Google 100-year war cycles. I think I mentioned it, Kerry, on the show. Every second decade in the last 1,000 years of a century, in the middle to beginning of the decade, has been a major war. World War I, War of 1812, that was Napoleon, 1712, 16, 17. Goes back all the way for at least 1,000 years, and we're in that same time zone now.
So we're just slaves to the cycles, huh?
Basically, that's what we think. Humans don't have the free choice they think they do.
Yeah, well, I've always had a feeling that was the case.
Right. Like if you like vanilla ice cream, you don't like chocolate, God put more vanilla taste buds in you, right? So no, I prefer vanilla to chocolate. No, he made you wired for vanilla. So he seems he's made us wired as a group to act in a certain way. And sunspots affected and, with mostly water. So when you have that type of effect, it's going to affect us. And Charles thinks there'll be a greater sense of depression, not financial, although that could be, but emotional because of the sunspot cycles over the next 5-6 years.
Yeah, interesting. Yeah, the sunspot cycles definitely play a large role in many things, crops and food prices, right?
Yeah, let's talk about that, as a matter of fact. Let's talk about food, because we wrote about it on Sunday. By the way, again, I'll mention to the listeners, write in, go to Charles Nenner Research and ask for a free month of the research that comes out 4 times a week. On Sunday, we send charts. And we wrote on this past Sunday, I'm just going to talk about 2 right now, wheat and cocoa. I talk about 3, wheat, corn, and cocoa. So wheat, we're close to a cycle low. Close above 582 will be a buy signal. And then we mentioned close for corn above 371 will also be a buy signal. And then talking about cocoa, nothing goes straight up, Charles Road. However, looking at longer-term cocoa cycles, the bull move should continue until 2019. And I have to admit, I think it's my eating of chocolate that's going to make the cycle up so much.
Yeah, mine too, man. I'm a chocoholic myself.
You want to carry China? The entire nation didn't eat chocolate for a long time. They just didn't have the taste buds for it. And then Brazil was pushing it. It's a funny story. And then they started to eat chocolate. And I have a feeling if you see here as an example, if our cycle shows cocoa's up for 6 years, right? Something's going to happen to make it go up. It's all of a sudden, you hear all the news that chocolate's good for you. All of a sudden, it's found out that it extends life 10 years, right? I don't know. That's what I'm saying. Cycles say it's going up. The news will say something else.
Yeah, that is remarkable. And
that's how it works. Crazy, but I say crazy. It seems to work, as you know. You watch this stuff all the time for years, and you're one of our biggest fans. And we're not making this up. We're not throwing darts.
Yeah, yep, that's incredible. Well, hey, let's talk more about these cycles and my sweet tooth on the Financial Survival Network.
FSN Radio. It's all about what's next.
Every week the show is growing. Would you like to be a part of it? Then go to clubfsn.com and help support us with $1, $2, $5, or $10 a month and get a host of premium content with newsletters dropped into your mailbox, free books, private audio clips, webinars, and much more. Then join clubfsn.com. If you want to get ahead of the trend and ensure your family's financial security before it's too late, go to clubfsn.com and sign up.
The Financial Survival Network. It's all about what's next.
Right. We've got David Gurwitz of Charles Nenner Research with us now. We're talking about the power of cycles. And obviously, David, it's not just your taste for chocolate. It's so many other things. It really does permeate everything, all of human existence, doesn't it?
Right. Yeah, I mean, look, we're coming up to Rosh Hashanah now, obviously, in the fall. And everybody's comfortable with the cycles in the weather and the seasons. But for some reason to think that it affects markets, again, the way we do it, I'll give you an example. There's a presidential cycle every 4 years. Everybody knows. Okay, that's one thing. What Charles came up with isn't so much that there's one cycle. There are multiple cycles for every data series. And so when you overlay all of those, and I'm going to say exactly what that is in a second, when they're all topping or bottoming, the assumption is that it's a top or a bottom. For example, we don't have enough data on Facebook to be able to give good predictions because you need a lot of data to be able to come up with monthly cycles. If Facebook's, I think, public now, how long? 2 years? 18 months?
Yep, not that long.
Only 24 monthly dates. I don't have enough to come up with enough math. I have 100 weekly, and I have 700, let's call it 240 trading days, 480. You come up with something. It's better to have 5 years because then you can come up with daily cycles, meaning price at the end of each day, the price at the end of each week, the price at the end of each month. And then we have quarterly as well. The more data you have, the better off you are. And we have data going back 1,000 years on interest rates and on grains, and obviously crude only 100 years and gold much longer. So that math is more sound to us. So when you take an example, take bonds, right? And which we want to talk about, obviously. Bonds, we talk about 30 years ago, rates were 18%. Now they're almost nothing. 60 years ago, they were almost nothing. So that's a 60-year cycle right there. 1950 rates were what they are now, 2%. And so we think that will continue and that they will be long-term going up again. It's just not happening so fast. Now, a lot of people think rates are not going to go up. And we called being long bonds from the beginning of the year till now. So it was a very good call. So, but that's going to happen, and that's going to make things not so pleasant for a lot of people and a lot of actuarial assumptions and things like that. So bonds, longer term TBT is going to be a good trade, but not yet. We even said bonds, cycles are topping in bond prices for sure. So longer term, people want to plan to think differently about being long bonds. They want to be short bonds, in effect. Just if they watch our research, hopefully we'll tell them when to be that way. one other thing I wanted to talk about, which we mentioned grains, and sugar is also a grain. It's going to be, well, to us, it's a grain. It grows. The whole idea of where stocks reached our target now, a little above 2,000 in the S&P. And, we think longer term, it's down for years. And then the 20s is going to be an incredibly strong up move in stocks like we've never seen before. It's going to maybe go 60, 80,000 on the Dow. Mm-hmm. So for all those who say the Dow is going to go to 80, 90,000, we agree. We just think we're taking a detour first.
Right.
And there'll be, rates will be going up even in deflation maybe because, there's going to be risk of people making loans. And, the first auction that fails is going to really trigger things. And it's hard to see now what's going to cause it because things have looked pretty good in the financial markets. Profits are good. The rate inversion hasn't happened yet. All the normal analysis that you hear is all true. But when there's all these war potentials that could just disrupt things, including sickness cycles, there was a flu that killed 60 million people not that long ago, Kerry. People have to think about that. We track that stuff also. So
that's right. Yeah.
That won't happen again. But, anyway, this is kind of what we put together. I'll tell you a big thing we do is the TSX. We cover, as you see, the S&P is the first, S&P, NASDAQ, and the Dow is the first thing on our work. And then the VIX is the volatility index, which nobody thought about 5 years ago, from what I remember. We didn't even cover it. Now it becomes one of our most important tools. And the VIX has really nailed things. And the VIX is very low now. It's like no one's afraid of anything down, but we think there's a cycle low very soon on the VIX. So there'll be more volatility. So we do think we'll see a down move. We're just not ready to cave over yet. It just, our overall technical model of 200 indicators that Charles came up with as his own overlay to his cycle target system has not turned negative. That usually does, when it does, a month to 6 weeks before the cycles do. It hasn't turned negative yet. So even if we get a down move, it won't be pronounced at the moment. It should come back up. But next year, we're expecting it to be, significantly lower.
It's fascinating. The more I look at these cycles, the more you see what's there, the more you realize how little you know.
Yeah. It's a fascinating thing. We have clients all over the world. You have clients all over the world because a lot of people write into us saying they listen to the Survival Network and they're from all over the place. Yeah. So, we meet people from all over the world. I don't sleep much because I'm talking at night to the Far East, early morning to Europe, and during the day just to America. And, we love our business because we don't manage money. So we don't have to, touch anybody's money. We just tell them primarily what to avoid and what stops to take, because I think it's very important people feel comfortable with stops so that at least, with volatility, you can be stopped out 3 times on a trade, but at least you don't have that position of, being down, because I find that bothers people more and they can't think straight.
Oh, yeah. Yeah. You don't want to be losing sleep over your portfolio, right?
People do. I can tell you for a fact. And they define themselves based on it, and I don't think they should. I mean, a lot of times sit in cash, there's concern about the economic system. Countries are taking cash. There's all that stuff that I don't want to talk about now because some of the things we see, like we see gold, as you do also, going up substantially higher, with a outlying view of way higher if it becomes monetized. And, that would mean a lot of not such pleasant things for the way we all kind of live right now. And so I don't really want to talk about it because everybody needs to focus on what they're doing now and, make plans for the future. But you have to recognize that these cycles seem to work. And like here, when Charles called the war cycles 3 years ago, nobody was thinking about what they're thinking about today.
No.
Now it's all over the place. There's 5 in Africa, the Far East, Ukraine, the Mideast, South America. Here, no, but we know what could be. So this was in cycles also. So it's just something for people to think about when they hopefully write in and start to see our work. They'll get an idea of a different point of view completely than what most people have. And hopefully we'll be able to help them survive what might be some very choppy times coming.
Yeah, I'm just like amazed at where things have come, because like you said, a few years ago, nobody would have ever thought that things could get where they are today, you know?
Right. Give me an example of the Aussie and the Canadian 4.5 years ago. Give me an idea, because again, I've been with Charles 12 years, and you and I already a couple of years we're talking. I know I don't know how many interviews I've done with you, but it's a bunch. I remember when we started doing the Aussie, right? This was like 5 years ago. The Aussie was 68 cents to the dollar, and so was the Canadian. Now, Aussie has gone past par. It's back now. Obviously, we think the Aussie is a good trade coming up, but just gives you an idea. And Charles said that then. He said then it's going to par. Aussie. This is 4 or 5 years ago.
I remember. Yeah.
Yeah. Who thought about Australia other than Crocodile Dundee and some tennis players? You know?
Yeah.
And obviously China. And now I got a lot of clients in Australia. I speak to them. You know, Australia did a lot of good things. They forced the people to save in this superannuation fund. I don't know if you're familiar with it.
Oh, yeah, sure.
So I a lot of people I deal with, just kind of regular guys got $400,000 in this fund that he was forced to save the last 20, 25 years. And they speak English. They're funny. They all stayed in gold. They kind of think gold. They kind of think resources. Obviously, it's Australia. They think about China. And so different countries that I found also focus on things in certain patterns. The Canadians are a certain way. The Western Canadians are a certain way, because of all the mining. The London hedge funds we deal with have certain mindsets. The Brazilians think a certain way. Everybody, had some very strong ones. I just want to read a few minutes ago. I just want to read you some indications of Japan and Korea and Brazil and Asia, because Charles was talking with a big international investment fund the other day, and it looks like Chinese and Vietnam aerospace and Chinese banks look very good. That's something. And FXI looks okay. And Europe is negative for the next 10 years. He thinks Europe is going to be like Japan in the last decade. Whereas gold, we think, is going to go up a lot. Silver, again, I'm going to give you a big picture now. Corn, wheat, soybeans, sugar, all bottoming. Crude, we have a target of 122 in second quarter of next year, and even much higher 3 years from now. For crude, nat gas lower, and then it goes up. And bonds down in price once the rates start to go up. And then currencies, the dollar we still think is going to begin its descent. Maybe that explains the Dow being 80,000 in today's terms. It's 80. If it would be 80,000, but if we see 80,000, but if the dollar gets cut in half, in effect, the Dow would only be 40,000 and go 15 years out from now. That's not that much of an increase. Dollar effect,
right?
That's
true. Yeah,
that's kind of the big picture. Agrium is bottoming and up till January. Apple, it looks like it's going to trade around 100 for a while, but longer term up. Yahoo, long term up. Intel looks okay longer term to next year. Tesla, which was interesting, we have some data on upside target 285, short term down for another few weeks, closed below 255 needed for sell signal, monthly tops end of December. Give you an idea, we do a lot of custom work for bigger clients. They'll give us certain things we don't normally cover in the system. We're able to do that as well.
Interesting. Well, yep. We need to wrap up. Just tell us again how we get that trial subscription.
Sure. Everybody listening, just go to charlesnenner.com, and there'll be a big button that says contact us, and write in and say, for David and Kerry having a good time talking about chocolate and sweet tooth and other. And I'd like to get the research for a month trial to see if it could help me. We only sell research. That's all we do. We don't manage money. We don't broker. Like Charles says, if you got money, it's your problem. It's not our problem.
Hey,
and if you have money, it doesn't mean you're smart. But if you have money, good, don't lose it. And that's
rather be lucky than smart. And just go over to financialsurvivalnetwork.com, sign up for the newsletter. You find the link to David's site there, to Charles Nenner Research, and just click it and sign up, and that's it. Just send David the email and you'll get on, and I found it very valuable, and sometimes it's just so uncannily correct. Like the calls on natural gas recently just knock your socks off. Anyway, David, thanks so much. Always a pleasure. We'll talk again soon.
Great, Kerry. Always look forward to the next time.
FSN Radio. It's all about what's next.
Every week the show is growing. Would you like to be a part of it? Then go to clubfsn.com and help support us with $1, $2, $5, or $10 a month and get a host of premium content with newsletters dropped into your mailbox, free books, private audio clips, webinars, and much more. Then join clubfsn.com. If you want to get ahead of the trend and ensure your family's financial security before it's too late, go to clubfsn.com and sign up.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.